Why did one of India's most trusted power market stocks suddenly turn into a roller coaster in a single morning? And why did it wipe out value within minutes after looking perfectly fine? Today, Indian Energy Exchange saw extreme volatility. The stock opened around 150 rupees, moved up strongly, and reached close to 160 rupees by mid-morning. For nearly half an hour, it kept trading near its highs, giving investors the impression that everything was under control. Then suddenly, within minutes, everything changed. A news update hit the market and the stock collapsed sharply. From the day's high, it dropped to around 141 rupees in just about 10 minutes. That was nearly a 13% fall from the top in a very short span of time. Panic set in instantly. After that, the stock attempted a rebound and moved back toward the mid-150 levels, but the relief did not last. Selling pressure returned, and the stock slipped again toward its day's lows. At this point, many investors were left confused. What exactly triggered such violent moves in such a short window? This is where today's story becomes important. The entire volatility revolved around one word: market coupling. The electricity regulator, CERC, made a statement suggesting that the order related to market coupling from July 2025 would be considered, with no immediate change indicated. The market struggled to interpret what this actually meant. Investors assumed that market coupling could still be implemented, and that assumption triggered panic selling. Soon after, another update surfaced. CERC's lawyers sought additional time from the tribunal to respond regarding the withdrawal of the market coupling order. This added even more confusion. No clear confirmation, no clear rejection, just uncertainty. That uncertainty is what the market hates the most. As of now, there is no clear decision on whether market coupling will be implemented or withdrawn. The regulator has indicated that any such move would need proper regulations, but there is no clarity on when those regulations will be framed or how long the process could take. The next key update is expected on Monday, when CERC is likely to present its response before the tribunal. Until then, the stock remains stuck in uncertainty. If you are following stories like this closely and want timely breakdowns of market moves that others react to late, this is where you should stay connected. We share such real market stories regularly. Now here is the part most investors are missing. This stock is not dangerous because of price movement alone. It is dangerous because uncertainty acts like high-voltage electricity. Even getting close without preparation can hurt. At the same time, uncertainty also creates opportunity, but only for investors who understand what they are dealing with. If market coupling is eventually implemented and the stock reacts negatively again, that phase could become a decisive moment for long-term investors. And if clarity comes in favor of the company, the stock may move up so fast that many will only watch from the sidelines. This is where discipline matters. Either you are prepared for volatility or you stay away completely. There is no middle ground in such cases. One final reminder before you make any decision. I am not a SEBI registered analyst. I do not give buy or sell recommendations. This video is for educational purposes only. Please consult your financial advisor before investing. Markets don't give comfort, they reward preparation. If this story helped you see today's chaos more clearly, like, follow, and subscribe to Invest with Sumit.